So you're all specially welcome to Winning in Business series. And like I said again and again, we have not brought, theoreticians. The people we have brought to share with us are practitioners. If you are in business, I'm sure you are already deriving a lot of value from the sessions we've already had, and tonight's not going to be an exception. Again, we're going to continue next week, Tuesday, until the last Tuesday, which is going to be 31st. But let me quickly make an appeal. If you are on this call and you are in business, I want to sincerely make an appeal. Don't miss the last session. Don't miss the last session. Don't miss the last session. If you are in business, it does not matter the industry in which you play, don't miss the last session. It's going to be another thing altogether. And I know why I've said that. So I did mention about business, Bible sense for living. Please don't miss out on that also every Wednesday. And so we continue again tomorrow as we continue to examine how to develop your life plan. Also, I've got a number of books published, but one of my books that I consider a great asset to anyone who wants to create wealth and achieve financial freedom is Financial Freedom Master Guide. And I want to strongly recommend, if you're anywhere in Nigeria, you can call the number 070-8797-0441 to place order, and it will be delivered to you for free anywhere in Nigeria. Now, if you are outside of Nigeria, you can order for that book on Amazon, all right? So, and that also will be delivered to you wherever you are. I don't want to waste time. My body, they hot today, not today. Winning in Business series, and I will be doing the introduction to our very, very special guest. Our speaker tonight that I'm introducing is someone that is very, very dear to me, very, very special to me and my family. And beyond that, it's been a source of inspiration and blessing to my family and I. And I want us to take this, this session very, very seriously. Where's my, can you imagine? I opened my own personal profile and I wanted to read, our speaker's profile. One second. All right, so just very briefly, our speaker today is a minister of the gospel. We call him Pastor Sam Adelusimo. Pastor Sam Adelusimo boasts an extensive and accomplished career in finance. Prior to embarking on his ministry journey, he held the esteemed position of Senior Manager of Financial Services Compliance at Walmart. Additionally, he served as the Senior Audit Manager in Global Internal Audits at Walmart. With over 15 years of experience in public accounting and consulting, Pastor Sam contributed as a Sarbanes-Oxley consultant at AIG Insurance in New York City while working at Smart and Associates, a distinguished firm of certified public accountants. Furthermore, he played a pivotal role as an instructor at the Northwest Arkansas campus of the University of Phoenix, where he impacted his knowledge in various business courses at both the undergraduate and graduate levels for a period exceeding 5 years before dedicating himself to ministry. Pastor Sam Adelusimo's educational journey led him to Brooklyn College of the City University of New York, where he attained a master's degree in accounting and economics in 2006. Prior to that achievement, he earned a master's in business administration from the Federal University of Technology, Akure, Nigeria in 2001. Notably, he is recognized as a fellow of the Institute of Chartered Accountants of Nigeria and holds the esteemed title of Certified Anti-Money Laundering Specialist. He currently serves as the managing partner of Kingdom Accountants and Advisors, a comprehensive financial services consulting firm. Furthermore, he plays the role of a director or trustee on the boards of several nonprofit organizations in the United States of America. So with a digital round of applause, I want us to specially welcome Pastor Sam Adelusimo. You're welcome, sir.
Thank you, Pastor Clement. I want to appreciate you and your team for inviting me. If you can hear me, just wait so I can know everybody can hear me. Okay. All right. Thank you. So thank you for inviting me for this class, and I appreciate everyone here. Tax is a very technical subject, whether at the individual level or whether at the corporate level. So it is a very good thing that you have done to bring, this subject into the Winning in Business series. This is one area where everybody, almost everybody, I should say, needs help, So without, taking much time, I'm just going to go straight into the topic, how to win, using tactics to win in business. And we're looking at how to save, better still, how to maximize tax savings or tax dollars. I'm going to jump from dollars to different currencies as I can. I was going to say as the Holy Spirit leads, but as much as I can. Everybody here tonight that is in one business or another, or an individual intending to go into business, there is only one reason why we are in business. So I am a businessman. I own and run a consulting firm. And the reason I own that firm is so I can make money, so I can make profit. Now, everything I will do in that business is going to be towards money making. So the first step, if you want to save or maximize, your tax dollars, the first step you want to do, you want to take rather, is to make sure that you select the right business structure, the right legal structure for your business. It is the number one thing. If you want to maximize, you want to save tax dollars, the number one thing any businessman must do is to select the right legal structure for that business. What do we call legal structure in the United States? You can do business without being recognized by the state or by the federal government. Now, in the United States, we have levels of recognition when it comes to taxation, right? So you have the local city where you live in. You can register your business only with the local city, with just the city, and you are not recognized with the state or the internal revenue at the federal level. That's Mr. Biden. You can also register with the state where you live in, out of these 50 plus states where we live in, and then majority of all businesses are registered at the state level. If you want to save tax dollars, the number one thing you must do is to make sure that you have the right legal structure. What are some legal structures? Number one, you can do business without registration, but that is, if you take my word for it, that is an attempt to commit financial suicide. If you do business without any form of registration, it's an attempt to commit financial suicide, because in the event of a lawsuit, you're going to be like, that prophet in the Bible that died, and the creditors. Creditors in this case are the people that he was indebted to, that he was owing. They came to take his children. So you are going to be like that if you ever start going to business without proper registration. You in the United States, where there is law, or there are laws, and they are, enforced, you can lose your private car, you can lose your private home, you can lose all the money in your bank account. They will wipe you clean from your retirement to your savings. They will wipe you clean. I've seen an example like that before, but we don't have a lot of time, so I'm going to be jumping. I'll send an example like that, and I'm not going to go into details. Now, you can also register with the city. You just go in and register with your city. You have nothing to do with the state. You continue like that. That one is what we call the sole proprietorship. I don't recommend it for anybody. I don't recommend that you do business without registration. I don't recommend sole proprietorship for anybody. In actual fact, your legal structure tells me your vision. It tells me how far you want to go. So if you are doing business and you said, oh, well, I'm just a sole proprietor, well, that's it. We know how far you are going to go, because as some business, no serious business, no serious corporate firms will deal with you or do business with you if you are just a sole proprietor. Let's take it at that. The next one is what we call limited liability company. Many, many years ago in the United States of America, you know, the guys came together. When I say the guys, you know, America is a place where they take care of themselves. Let's leave it at that. They take care of themselves very, very well. So the guys, the pressure group, the big guys who has the money, they came together like, wait a minute. We don't want to be what I'm going to get to that, what they call a C corporation. We don't want to be a corporation. We just want to be a sole proprietorship, but we also don't want the risk. We don't want the risk associated with being a sole proprietorship in the event that something happened to us or to the business. We don't want the creditor to come and take our wives, our children, or our asset. We want to do business like a sole proprietor, but have the protection for our asset. And so they came up with what we call the limited liability company. So there is the sole proprietorship, there is you not registering, there is the limited liability company, we call it LLC, which is, we call it in tax palace, we call it a disregarded entity. Disregarded. Why do we call it disregarded? Because the federal government, they don't recognize it. The only place where LLC is recognized is in your state. It's in your state. Then the next one is called the S corporation, the subchapter S corporation. We call it small business corporation. Then the next one is what we call the C corporation. The C corporation. By the way, let me say this, you know, we have, for all of this, we have just 1 hour. So we're not going to be able to cover everything, but I'm going to try to lay the foundation that will be able to keep you thinking, am I properly structured? See, if you are not properly structured, you are already working for the internal revenue. Internal revenue here is the tax man. They have different names. They are called Uncle Sam. They are not my uncle, but they call Uncle Sam, right? But they are interested in your dollars. I often ask this question, whether to my clients or to any individual, an individual, whether it's corporate or individual. When you make $1, how much of that dollar do you pay out as taxes? That question is so important because it will help you to think and be, wow, you wake up 5 a.m. or whatever a.m., you went back to bed really late, you made $1. If you make $1 million, it's still $1. If you make 100,000, it's still $1. How much of that do you pay out to the IRS? How much do you pay out to your state? God bless you, you live in a city in the United States where city charges tax. There are 5 different of taxes for an individual in the United States. 5. There is federal government, Mr. Biden will collect tax from you. Your state governor will collect tax. If you live in some cities, the city will collect tax from you. There are taxes called Social Security, and the taxes called Medicare. And this, please pay attention to the last 2, Social Security and Medicare, because those 2, they actually are the bread and the butter, the reason why you may want to change your structure from a limited liability company to an S corporation. Okay, to S corporation. So the first step you want to take is make sure you are properly structured, legally structured. Don't run a business with due respect, as if for those of us in the United States or in the abroad, as they would say, don't run a business like, you know, there is no law. Protect yourself. You see, if you don't protect yourself, you are going to, the money you make will not be enough to pay the attorneys when the matters come around. Okay, So you have the LLC. LLC is the simplest form. It protects you, it protects your asset, recognized everywhere, even though the IRS call it disregarded entity, but they still, and why is it called disregarded entity? Let me address that. Because LLC by itself and S corporation, they don't pay taxes as a business. They don't pay taxes. The owners will make the money, and their bottom line, what we call the bottom line, is the net income. The net income. Let's say your revenue is $1 million, or your cost of goods sold and expenses is 900,000. The difference between 1 million and 900,000 is 100,000. That is your net income. You pay taxes. As an individual who owns LLC, you pay tax on that $100,000, whether it's on LLC or S corporation. Now, C corporation is the biggest, guys. As our host, Pastor Clement said, I work for a few corporate organizations. The last place where I hang my hat was the University of Phoenix, where I taught here in town in their 2 campuses. But I also work for Walmart. Now, those guys, those 2 last places, or all of the places we work, are C corporations. They are the corporate. Those guys pay a lot of taxes. I am making a recommendation, except now there are instances where you want your business to be a C corporation. But if you are just starting out and you decide to go and start as a C corporation, I want to make a bold statement that it is a wrong step. If you are just starting out, you want to start out in such a way that you make it easy on yourself. You want to start out in such a way that you are able to pay taxes at your own rate, at the rate that you pay for your own taxes. And thank God for, Donald Trump. We're going to get to that because there is a law in America called Tax Cut and Job Act law. It was signed into law in the year 2017 by Donald Trump. For some reasons, I'm not going to go into the reason that I think he signed it, but that law has come out to be a blessing to many, many individuals and corporate entities. Well, so LLCs don't pay tax on their income. The income of the LLCs are routed through the owners. S corporations don't pay tax on their income. The income on S corporations are routed through their owners. C corporations pay multiple taxes. Multiple taxes. Number one, if you own a C Corp and you work for that C Corp, you are going to pay taxes on your salary. Number one. Number two, when you are prepare your financial statement and you know your net income, you are going to pay tax. The IRS is going to take tax on your net income. Your state where you live in will take tax on your net income. You pay tax in 2 ways like that on the net income. That is in addition to the taxes on salary. Now, for your stockholders, for your shareholders, depending on where you are listening from, in Nigeria, we call them shareholders. In America, we call them stockholders. Now, they also pay dividend. They pay tax on the dividend that is shared in C corporation. It is not the same way on S corporation and LLC. Now, maximizing tax dollars, if you own LLC, LLC is like the limited, the Sam Adelusimo Limited in Nigeria, right? Purified Water Limited. You are not the public PLC, when you are not PLC yet. You are just the limited. Now, the S corporation also offer a very fantastic type of tax savings. What is that? What is that? You can save on what I call what is known as the self-employment tax. Please pay attention to this. Originally, I call them the Social Security, the Medicare. For the people in America who are listening today and they have a job that they work as employee in America, those taxes are not negotiable. That is, when you are getting your paycheck, your employer is the representative of government to take out part of, and that part is 6.2% as Social Security. The next one that is called Medicare is 1.45%. So right there, 7.65% is non-negotiable, taken out of your salary, up to a certain amount for Social Security, but no cap on Medicare. Listen to this. I want to attempt to make this clear. If you are a businessman and you have LLC, you are going to pay that twice. That's coming to 15.3%. Why are you paying twice? You are considered the employee for, I own a business, I own LLCs, I own a couple of LLCs, so I pay that tax twice because I am my own employer, I am my own employee. So, however, you can avoid that tax saving for your business. You can avoid, not evade. You can avoid. Avoidance are the strategies you put in place for you to pay less taxes. It is legal. It is not criminal. For example, you can take your LLC and convert it tax-wise to S corporation. Why would you want to do that? You want to do that because having S corporation will help you to avoid that 15.3% taxes. So depending on how much you are making, depending on what your goals are, you want to look at converting your LLC to S corporation at some point. At some point, okay? Because of time, I'm going to leave the first point here, and then I will go to the point number two. Point number two, when you have selected the right structure, please, these are very soft points, but they are so vital. Record keeping. I've been very disappointed with African businessmen in the United States of America. Very disappointed because a lot of people that I've seen, they don't have respect for record keeping. And if you don't have respect for record keeping, I assure you 100% that you are going to pay more taxes. We just finished some taxes 2 days ago, or yesterday, I should say. And this morning I got a call from one of my clients, and he goes, "Oh, Pastor Sam, I'm sorry, I forgot to add XYZ." I said, "Sir, this is what I've been telling you. Invest just little amount of money in a software that will track your records for you, and you will sleep in peace." So number two, record keeping. Have respect for it. You don't have respect for it, you lose a lot of money. Okay? Number three, I am a very professional, very good tax accountant. Tax accountant. There is a difference between a financial accountant and a tax accountant. There is a difference. Businessmen, please try to know the difference. I am a very good tax accountant. I'm going to give you guys an example here. I'm going to give you guys an example. A few years ago, there is a company called General Electric. General Electric is in the United States of America. They are also in Nigeria. They are, everywhere. They are known to make engines for planes. Many of us have flown on jets whose engines were made by General Electric. Many of us use their products almost every day. But they did something fantastic a few years ago. Over a period of 4 years, they made a net income of about $28 billion. $28 billion over a period of about 4 years. And then they asked themselves, the leadership asked themselves a question. To some people, that was not good. But remember, if Pastor Clement hired a CEO for his business today, or one of his businesses, the instruction to that new CEO, while he is the group CEO, the instruction to that new CEO is to go and make money for the business legally. Now, what these guys did, remember that GE is in the stock market in the United States, right? They sell stock. You and I go there to buy their stock. I don't want story. When I take my money to buy stock, you're going to come around and tell me stories. No, I want dividend. I want appreciation of my equity. I want my stock to grow. I want you to declare dividend every quarter, and I want to get a part of it. That's why I invested in your company. So people may say, oh yeah, GE did this, they did that, but listen to what they did. They made $28 billion. At the time, their tax rate should be around 30-35%. Can I tell you they didn't pay a dime? They did not pay 1 cent of tax for those period. Can I tell you the icing on the cake? They got a refund from the internal revenue of about 2.8 billion, about 2.8, 2.5 billion dollars back. Ask yourself a question. How? How? What did they do? This was what they did. That's my point number 3. They hire very super brat accountants, tax accountants, tax lawyers, about 300 of them. And they created a department. And they said, hey, so they printed, the tax code. I told you at the beginning that the tax law in America is very, very technical. What we call tax code in America had about 10,000 pages before Obamacare. What we call Obamacare. So if you're an individual, you are filing tax return in the United States, what we are doing, when you come and we say, oh, we want to file your tax return, we are literally taking your life in 1 year and applying it to those 10,000 pages to see where you fit in. So if you like, you don't want to pay your accountant or tax accountant and you're filing your tax return by yourself, good luck. Somebody did not want to pay, went to do their tax return by themselves, and then came to me because they were owing. So I looked at it and I started smiling. And she goes, Sam, why are you smiling? I said, because you just lost $4,000. You are being 1 penny wise, 1 pound foolish. Hire a very good accountant. So they hired these 300 guys, put them together, pay them good money, and they made photocopies in those days of those binders and gave it to them all and said, this is the United States tax law. Go and find the loopholes in this tax law. And they gave them time. Those guys came back, and this is being recorded. This, you can Google it and find out what I'm telling you. I can give you the years. I think it was 2008 to 2012 or so. They came back that GE will not pay a dime, and GE did not pay 1 cent. Everybody was making noise. How can you make 28 billion? You are not a good citizen. But they didn't write the law. They did not write the law. It is the poor people that finances the tax in this land. Why? Because the poor people are not putting their mind into how they can save on tax dollars. Okay. So how do you make 2.28 billion and you get 2.1 billion, 2.5 billion in refunds? All you have to do is hire the right accountant. Now, I think maybe some of you are looking for some really technical, you got to take your tax and do this and do that. That's not going to happen. Because this is not a platform for me to render that type of service to you. If you are interested, if you're a businessman anywhere, even if it's in Nigeria, by the grace of God, I practiced accounting in Nigeria. I started accounting in Nigeria in 1991. So, and I qualified, I became a fellow over 15 years ago. So I am connected with practices in Nigeria that I can connect you to the right person, even with the federal inland and the Lagos State Inland Revenue, if you need that service. But in the United States, if you need help, yeah, you can reach out to me. They'll give you my details at the end of this program. But you have to hire the right accountant. The next one is, please do not wait until it is time to file your tax return before you start running to your accountant. Okay? Don't wait. Don't wait. What does that mean? Meet with your tax accountant regularly. For example, there are some assets. Okay, I'm gonna give an example here. There are some assets you need to buy now that will save you taxes next year as a businessman. There are some income you need to spread out right now. There are some monies that you should not receive, you should not accept anymore. If you plan your cash flow very well, there are some monies you shouldn't receive. There is provision in the tax law for deferred compensation. I'll give you an example. I have a client in this area where I live that bought hundreds of acres of land many years ago. I think those acres of land he bought them maybe $1,000 1 acre. A few years ago, he started selling them. The cheapest he sold was 1 acre for $100,000. So Pastor Clement, as a real estate person, will understand what I'm telling you. You buy real estate, you sit on it. So if someone bought a land for 1,000 and selling it for 100,000, you do the math. But very late in December, he came to my office and he said, "Oh, I have a closing tomorrow." In the United States, what we call a closing is when the buyer and the seller and the bank come to a table on the final day where the buyer will exchange the check for the keys for the property, and they will sign the title, and everybody will shake hands and say, "Congratulations, you have bought a home." And he goes, "Sam, I have a closing tomorrow." I said, "For what?" He said, "I sold the land." I said, "You sold the land?" "You sold one in November." He said, "Yes." "And you and I talk about how much taxes you're going to pay on it." He said, "Yes, I sold this one and the closing is tomorrow." I said, listen to me. Can I see the document?" So he showed it to me, and I told him, "Call the bank now and tell them this closing must be postponed till January." And he was like, "Why?" I said, "What are you not getting? You sold in November. You already have about $700,000 in taxes. $500,000 you are going to pay in taxes. Now you're going to get these couple of millions, and your tax on that is going to be added to this. And on the one that you were supposed to pay, 500,000, it will incrementally go up, even on the one that you already know. Where you're supposed to pay 500, you will be paying 600 because you have now added more income here." He said, "Oh, I didn't think about it like that." Good news is he called, he made a call. He wrote me a check that day for appreciation, not for consulting. He said, "Thank you. Here is a little token for lunch." Okay. So meet with your tax accountant regularly. Discuss your plan. Discuss how your tax accountant is able to guide you on a lot of tax credits. I'm going to go to the next one. Attempt to understand how tax laws affect your businesses. Attempt to know it. I told you about a law that is called Tax Cuts and Jobs Act. This is my opinion. It may not be correct. What I'm about to say is my opinion. It may not be correct. I think Donald Trump signed that law that made that law to happen for selfish reasons. Again, I know I'm online, but I said it's my opinion, so it doesn't matter, right? But when I saw that law and I read it, and I was like, the first thing, I was invited to the state of Virginia to come and analyze that law in the year 2018. I went to Virginia and I analyzed it, and I made this same comment, and I said this law was put in place because Donald Trump is a businessman. You will never see any, not Nigerian president, any American president who is not a businessman sign that type of law. So I came to that conclusion, man, this guy wants to save himself. He makes millions, if not billions, in businesses, and he does not want to pay tax. So what he did was make this, they got to, and cut from 37% to 21%. I mean, 35 to 21, saving 14% in the process. So if your tax is 100 million and you save 14%, that's $14 million. If your tax is 1 billion and you save 14%, that's $140 million. Okay. Now, when I look at that law, I was like, yeah. So I want to appeal to you to know the laws, the way they affect you, whether as an individual. There are a lot of us, there are people that may be hearing me, I would say, in the United States, that they have little children. They don't even know what is called child tax credit. They don't know what is called earned income credit. There are businessmen in the United States that are not aware of the employee credits they can get. There are businesses in America that are not aware of research and development credits. Money is there. So you need to know that how tax law affects you. Okay? I think I will add one more. I will add one more. Okay, carry out your periodic review. I think I talked about that. Know your numbers. Know your numbers. Know your numbers. It's extremely important for you to know your numbers. We just finished tax return yesterday, and I'm doing some taxes, and I'm like, Jesus. I mean, I have clients that it's the same thing year in, year out, year in, year out. What do I mean is the same thing? The same thing because they keep paying more. Out of that $1, they keep paying more. And it gets to me as an individual. It gets to me. I don't want you to pay more. If you make $1, keep more in your pocket. The question is, what do you need to do to keep more in your pocket? You don't even have retirement savings. You don't know when to buy a car. You own LLC and you have a vehicle and your vehicle is in your name. Are you kidding me? How is your vehicle supposed to be in your name? How is your computer in your name? How is your desk in your name, in your home? Anyway, I'm going to pause here for questions because I know the time is already ongoing. I'm going to pause for a minute for questions, Pastor. Thank you. I'm going to pause for questions here. Thank you.
Wow. Wow, this is incredible. Can we please give a digital round of applause for Pastor Sam Adelusimo? This is just this is just out of the world. For those who may not understand, particularly if they're operating outside of the United States, many of the concepts are quite similar to Nigeria, but the United States is a very litigious environment. So laws are enforced here. There's no way around it. There's no escape routes. You just need to understand the law and then leverage it. And this is just exceptional. This is so exceptional. Let me quickly run through a few of the points. Stella, are you in the building? I think you were taking notes earlier and dropping some points. Maybe you should even do that if you don't mind. Stella?
Thank you very much. Thank you very much, Pastor Sam, for that. That was very, very insightful. I know a lot of us are global business leaders, though we're practicing in Nigeria, but we're looking forward to in the diaspora. And I think this would come very, very handy because we even see that most of the technology companies in Nigeria are incorporated in the US for certain reasons that we have learned some of, and we look forward to learning so much more. So it's time for question and answers. If you have any question about,
can you do me a favor? Can you run through those points? I think you left one. Yes, run through them, and then if you have any questions, please drop your questions in the chat room. Pastor Sam is still ready to take those questions. But let's just summarize the points. I have them too. Okay. If you want to do it, or you could go ahead and do it.
I can. Thank you. Okay, so we have 5 points. Pastor Sam shared 5 points with us, and then the first one is you need to have the right legal structure for your business. So for the kind of business that you're running, you need to know the appropriate legal structure. And then he mentioned some of these structures. He mentioned the LLC, which is the equivalent of a limited company here in Nigeria. He mentioned the S corporation. He also mentioned the C corporation. He also went further to mention some of the taxes that you're going to pay if you have any of these structures. And then he also mentioned tax avoidance, saying that these are strategies by which we can pay less taxes legally. So it means that you're just taking advantages of the loophole. And then the second point 2, he says, have respect for record keeping. Have respect for record keeping. It might not be easy. It might look very manual, very routine, and very boring. So he advises that you invest in perhaps a software that can help you track all of your expenses so that you don't lose sight of any of your expense. And for the third point, he mentioned hire a competent tax accountant. So there are accountants, but there are people who have specialized in taxation. So those are the kind of people that you should hire. It is penny wise to do that so that you do not lose money. And then he gave us the illustration of General Electric. And, while he was mentioning that, I went online already and I saw several links that we can read up to know how GE plays the tax game. He also mentioned how some of the strategies that a tax accountant can help you to minimize the tax that you pay, advising you on some of the assets that you can buy now to save taxation, and also how to spread your income. And then for point 4, he mentioned the need for each and every one of us to know the tax laws and how it affects us. So whether you're an individual, S company, C company, or LLC, there's a need for you to have an understanding of the tax laws so that you can take advantage of some of the credits, employees credits, research and development credits, and several other credits that exist legally. And then the 5th one, he says there's a need for you to know your numbers as a business person, carry out periodic checks in your businesses. And, if you practice all of this, you would be able to manage the amounts that you pay as taxes. And there's a need for us to know that these are very, very important points that we should take note of. But then if you also need specialized counsel, you can always reach out to him. He's going to share, and our convener will also share how we can reach out to him if we need his help, whether you're in Nigeria or in the diaspora. He'll be willing to help you. So please drop your questions. I can see a question from Marvelous Alabi. Can I take that now, sir?
All right, so Stella, before we go on, there were 6 points he mentioned. I think you omitted one.
Oh, I think I missed that.
Or maybe you mixed them up. He mentioned that you should meet with your tax accountants regularly.
Oh, I mixed.
Yes.
Yeah.
Meet your tax accountants regularly. So you see that I'm a good student. Also following up. All right, so thank you very much. Before we start taking those questions, so Stella, stand by. Before we start taking those questions, for those of you who already know me, my area of specialization is in real estate, business growth, and of course, wealth creation. I'm very, very passionate about seeing people create wealth. Now, in 2024, the first week in January, I'll be hosting first of its kind. This is the first time I'll be doing it in this manner. And it's specifically for business people, right? So I'm going to be hosting a financial freedom challenge, right? It's going to be three full days, and it's going to be power-packed. And I know why I'm saying that, why this program is going to be holding. So I want you to do something. I'm not going to give you too much information. My intention is not to impress you. It's only 2 people. I'm ready to share my own secrets and share some of the mistakes I've made that you shouldn't make as well. If you are a business owner, you plan to go into business and you really want to achieve financial freedom, don't miss that program. All you just need to do is text challenge to 0708 797 0441. Text challenge, all right? You can WhatsApp it. You can send it as SMS, challenge to 0708 797 0441. For those of you joining from the US and UK or anywhere else outside of Nigeria, I would recommend you add +234. Now, take this from me. As entrepreneurs, majority of us go into business with the intention to achieve business freedom and financial freedom. Unfortunately, a number of us get into those business and then we have unfortunately created a job for ourselves and we feel trapped. And then it appears everybody, we are leveraged by everybody. It appears you guarantee everybody everything and you're not guaranteed anything. And so many of those things often lead to burnout and stress and frustration for a lot of business owners. So you could make billions upon billions, and then you can still end up in this particular issue. So it doesn't matter the size of your business at this point in time. You will save yourself a lot of years of heartache if you attend that Financial Freedom Challenge. So I'm going to be sharing with you some of the secrets I've found. I was very glad when Pastor Sam was talking about, how dare you buy computers in your name and you own a business? How dare you buy computer, buy house, buy this and that in your name? I mean, it doesn't make any sense. So there are many, many things that I have learned. Some I learned in a very hard way. Some I learned from other people's mistakes. And it's going to be a great opportunity for me to share with you. So just send challenge to that number, and then we'll be sending you details in the coming days. So let's take questions right about now.
Okay. So our first question is from Marvelous Alabi, and it says, what documentation should I maintain for tax purposes in the US and the UK? He also mentions that, should I consider itemizing deductions as a business, or is the standard deduction more suitable for business? So that's the first question.
Okay, thank you. So let me take from the part B of that first question. As a businessman or business person, absolutely, you have to itemize. There's nothing about talking about standard deductions for a businessman. What is the standard deduction? Standard deduction, like I referred to the Tax Cut and Jobs Act of 2017. Standard deduction it's an amount that is given, that is allowed, for a taxpayer to deduct from their salary before the balance is taxable. Now, if a taxpayer has different types of expenses that are allowable to be deducted, then they are allowed to list it. That's what we call itemized. For example, if you have a home and you pay interest on your mortgage, you are a believer, you give money to church, you pay taxes on your car, you pay taxes on your home. You have different things that you can list out, and what you list out is more than the amount that the government is offering. There you jettison, you forget the one government is offering, you take the one that is your own. I have never, except for the first 2-3 years I came to the United States, I've always done itemized deduction. So yes, as a businessman, itemize your deduction. And what record should you keep in the US? Record keeping. I'll give you an example. I mean, this is for free. I mean, you really have to appreciate Pastor Clement for this, right? What I'm about to say is when people come, some of the things I'm saying, when people come for consulting, these are things we tell them and we charge them. But listen to this. One of the ways to know the record to keep is when you choose the right business structure and you get registered either in the state or incorporated, the next step is for you to open a bank account in the name of that business. And then right there, all transactions go through that bank. And so the bank helps you to keep a record. There is something in the United States called the record retention law. The banks are mandated to keep your bank statement for 7 years minimum to the bank and download. So if you are a businessman and all your transactions go through the bank, whether you write a check or you use your card, whether it's debit or credit card, they are keeping the record for you. Then all you have to do is have the right software and match or sync that. And so they keep the record. Now, if you want to take it to the next best practice, if you are going to have policies. For example, if you buy an item that is $500 and above, you want to attach the receipt to your software and save it to the cloud. So when you have your audit, like I'm an auditor, right? When you have your audit, when the auditors come next year, you show some expense of $2,000 or $3,000 or $10,000 or $100,000. They want to see the receipt. if there's a board resolution to go into a business or to pay somebody, you are going to take the minutes of that meeting. You are going to attach it to that approval, and it's going to save it there into the cloud. This is how you keep document and you do record retention. Okay. And then we can, like I said, we can take it offline. If you have specific questions, we can guide you. This is something we do that we can tell you how to create your business, how to create your accounting system, how to do your record keeping. Because when we are doing that, what is in our mind is, we are thinking about your tax return. Let's go to the next question.
Sir, can you please provide your email address, your contacts, your office details,
yes,
so that people who want to reach out to you for professional services, because it's not free of charge. For those of you who are online, it's not free of charge. So you reach out, but I can assure you, you are in the right hand. That's what I can assure you of that. But more importantly, sir, there's something you and I discussed the other day, and you were saying that tax strategy should precede tax records or something. Can you expand that a bit, sir?
Yes. So this is my 247163855 and my email address. Sorry, sir. Finance Kingdom. Okay. So now, please repeat that question. Tax strategy should precede
tax
plan.
Tax planning, or I think you said tax planning or tax strategy. I can't remember. Something should precede one another or so.
So what that means is, this is the month of October. Now, your tax plans for the year 2024 should already be on your desk as a businessman. So you should be looking at your financial statement for 2022, not 2023. 2022, because that's already done. You have paid the tax on 2022, and you are asking yourself, wow, I paid this much. How much revenue are we going to bring in? How much tax do we intend to pay? That is the strategy. When you ask yourself that question, then you now ask yourself the next question. How do we achieve that goal? That is when you begin to, check, your assets. That is when you begin to delay some revenue. Like this is October. Now, be careful with revenue recognition defer, because you don't want to keep money in the hand of somebody who does not want to pay you, and you say you are deferring revenue because you don't want to pay tax. That's a very bad business approach. But if you are the type that spreads income out, there should be a way for you, or you are the type, in the example that I gave about my client who was selling the land. He had the document in his hand. All I did was to say, delay disclosing, and that's all. So your tax planning now you are going to ask yourself a question. Rather than pay, so I'll give you another example. Rather than pay money in taxes to the government, whether it's the state or the federal, will it not be better for you to understand your tax system and put that money into your own retirement for the future? The law in the United States permits you and I to put up to 50% of our net income into our retirement, up to about, I think, $60,000 now, tax-free every year. I once had a couple of physicians, doctors, they're businessmen, and every year I guided them, in addition to whatever on their business, I guided them to put away that amount of money tax-free. And imagine how much they put away in 10 years. The millions were already there. So your tax planning begins now for the year 2024. There are vehicles you are going to buy now because you are looking at depreciation. A lot of people don't like Donald Trump. Listen, give it to that guy. He's a very smart guy. Give it to him. You may not like him politically, but that guy is smart. So he knows this is a guy that knows how to use depreciation legally. He will buy a real estate and he will spread the depreciation. When you have tax to pay, it is the law. So give it to him. Anyway, I hope that answers that question.
Yes, it did. It did because I think what what we discussed was that there are tax accountants that are very good with when it comes to tax preparation and all of that.
Okay.
And whereas you have other people, other tax accountants that are very, very good when it comes to strategy. And then that was when you mentioned that tax strategy and planning should actually precede tax preparation. So
absolutely.
that was
okay,
what I
see. That's correct. That's correct, man of God. So if you wait, so we're going to start filing taxes on January 15, right? 2 months, is it 2 or 3 months out now?
Yes, sir.
If you wait till that time to file your 2023 tax, and you come here or you go to your tax accountant and you are complaining, there's so little that can be done at that point. But if you go to your tax accountant in June and say, hey, we have 6 months before the end of the year, what should I be doing now? That is the tax planning. What should I be doing today? And so you look at that and it gives you a plan. It is even sweet when you can have that conversation today for the purpose of next year. You know, on Sunday evening, I had a conversation with a family like that for the purpose of, okay, and tomorrow evening, we're going to have a meeting where I'm saying, okay, come, let's talk about your 2024 taxes. Okay?
Yes, sir. Awesome. Stella, over to you, please.
You're on mute. Cannot hear you.
Okay. Thank you very much, sir. And thank you, our convener, also for adding, more flesh to that question, helping us to learn based on your conversation. So the next question we have here is from John Adelusimo, and he says, what other assets besides real estate can be used to save taxes?
It depends on your industry. I just mentioned research and development. There are states in America where you can place your business and you won't pay tax for the next 10 years. And just like in Nigeria, the free exports EPZ or EPZ, there was somewhere where you can go do somewhere in Calabar, and you can do this processing zone, and boom, you're tax free. In the state where I live, there is just about 2 hours away from here, there is a place where you can put a factory. If you're a manufacturing company, and in 10 years you pay tax. So it's not just real estate. I mentioned research and development. There are very many things you can do to save an asset, but it also depends on your industry. It depends on your industry. So if we know the industry where you are, because we can give some generic, I can talk about some generic examples, which I already did. But let's say you say, oh, I'm in healthcare. I'm into healthcare. What can I do to save taxes in healthcare? There is always those basic things, like you find out when to hire an employee and do a W-2 employee. Because for every employee you hire, you may be receiving $5,000, $10,000 on each of them for that period, as long as you keep them on W-2 for a period of maybe 3 months or 6 months in a certain time. Okay, and there are times you buy computers, you computerize your office, and you do depreciation on them. And there are times your computers are not bad, but you want to change them.
Wow. So I think we have one more question, but before we attend to that question, this Saturday, for all of us on the call, we will be hosting. This one is a business master class, and we'll be having Izu Woma and Ezekiel Sholesi. It's going to be 11 a.m. to 1 p.m. West African time, but that will be 6 a.m. EST. In the United States. So for those of you who have missed previous sessions, you don't even want to miss this one as well. this Saturday. So it's business clinic with Izu Woma and Ezekiel Chudesi. Izu is known for business restructuring, branding, and all of that. Ezekiel Chudesi is strategy factory, right? So you don't want to miss these guys. I still spoke with both of them today. So please make it a date this Saturday. If you register for this program, certainly you will get reminders for those particular for this coming edition. So the final question, please, Stella, so that we can call it a day. Thank you so much, sir. We deeply appreciate it. Yes.
Thank you. So this next question is also from Marvelous Alabi, and he says, how early would new business consider, how early should a new business consider the service of a tax consultant? When will such business qualify for tax returns?
How early? As soon as the business is registered or incorporated. At that time, you save money because all you're just doing is you're having a consulting fee. You sit down. That is when your financial accountant and your tax accountant begin to map, what we call mapping. They do the architectural design of your accounting system. We call it chart of account. So when they do that architectural design of your accounting system, which we call chart of account, they map it for tax purposes. That is when you share your vision with your tax accountant or your financial accountant. Now, one person can serve as both. So when you share that vision, you describe what you intend to achieve, how you want to save tax. That is when your financial accountant and your tax accountant will develop your accounting system. And that is when they put the next meeting on the calendar to see in the 3 months or 6 months, did you achieve your financial goals? If you achieve your financial goals, then that is when your tax accountant is telling you, sir, your tax on this is going to be about 100,000 next year. That is when you begin to ask, okay, what can I do now? You still have 3 months. So as early as possible, when will that company or that be qualified for the first tax return? In the United States of America, if you start a business today, October 17, you will file a tax return next year. It is called the initial, the first tax return is from the day you start to the end of the year. Then your next tax return is from January 1 to December 31st. However, you know that in taxation, now you can have one company have two sets of financial statements for 1 year. I hope you guys know that. One is a financial accounting financial statement. The other one is a tax accounting. They are different because there are some items that you see on taxation that you not see in taxes that you won't see in a financial record. It's not like they are cooking the books. It's just the way. That's why you have to understand this difference. So they are an organization. For example, Walmart Incorporated, their financial year starts from February 1 to January 31. That's their 12 months. I have clients whose tax year starts from April 1 to March ending. But the fiscal year at the tax year in the United States is generally January 1 to December 31. However, there are companies like with the C corporation, the big guys, I call them. Again, I don't recommend it for any entry-level businessman. However, there are benefits to C corporation, very mighty benefit. If you are going to access loans from the stock market, LLC will not give that to you. S corporation will not give that to you. You can get loans from your family members and friends if you're LLC and S corporation. But if you intend to access loans from the primary or secondary market, you are going to have some sort of C corporation. Okay. And then with C corporation also, you are going to with filing for C corporation, I think you can have the year. I think I shared Walmart being January, being February. But Walmart is February, right? February to March. And then I think another company I dealt with was April to March. I think it was so. I don't know if I answered that question, but
yes,
your tax is due immediately following the year you are incorporated.
I think that's all.
Okay.
Thank you very much, sir.
Thank you.
To everyone that have joined us this evening, this afternoon, this morning, wherever you're joining us from. We trust that it has been a very insightful session. And so I'll just be doing a brief run through, a reminder of some of the announcements that our convener has made already. So in January, we're going to be having a financial freedom challenge, and we want you to take advantage of this opportunity. All you have to do is to text the word challenge to this number. So if you are connecting from outside of Nigeria, you can add +234, which is the country code for Nigeria. And the number reads to 070-879-70441. I'll take it again. 070-879-70441. Text challenge. You can do this via SMS or through WhatsApp. And also to remind us that we'll be having the business clinic. The business clinic holds this Saturday, the 21st of October, 2023, 6 a.m. for the United States time and 11 a.m. here in Nigeria. And our convener would be accompanied or supported by two fantastic men who have done very well in business, Aizu Uwoma, the founder and CEO of Xavier. So you can look them up so you know the caliber of people that will be speaking to you. And Ezekiel Sholesi, CEO of the Lead Simple company. Now, this is one segment you do not want to miss. So far, you have learned. So we can assure you that this promises to be a better, or, it gets better. So please ensure that you do not miss this. So set your calendars. If you have any Owambe, you need this reminder, set it in your calendar so that you do not miss it. There might be no replay. And this is also remind us that same time next week, Tuesday, we'll be having an amazing session with Mr. Taiwo Akinlami. He's the principal attorney of Gilgal Partners, and he's going to be speaking to us on lawpreneurship, bridging life, business, and law. So far, you've seen that this segment of Winning in Business caters to the very, very important systems that we should have in our business. We started with the essential systems you should have in your business by our convener. For the second class, we touched on sales by Paul, and now we're looking at tax saving strategies. And forward looking, we're going to be having law. And you can agree with me that these are very essential parts of your business that you do not want to joke with. So if you're a first timer, I want to welcome you. Thank you for joining us. We hope it was worth your time. Endeavor to follow us on social media platforms. Follow Oladipupo Clement on Instagram, on YouTube as well, and ensure that you turn on your notifications. So every time we come on live, you get notified and you would not miss any of the segments. And you can do well to also watch prior videos that have been shared. And we share videos weekly, very insightful ones. So please ensure that you tell a friend to tell a friend not to miss it. And don't also forget that it is the doers that get blessed, not just the hearers. So beyond just hearing, ensure that you do. And we want to win together with you. We want you to share your testimonial with us. If you have any testimonial from some of the points that you've learned so far, you can also share it with that WhatsApp number, and we'll be happy to rejoice with you. Let's get the final word from our convener. Let's welcome Dr. Timothy Oladipupo Clement. Over to you, sir.
Thank you so much, Stella. You do it so perfectly, so sweatlessly, so effortlessly. Thank you very much. Please do not forget the contact details. Kingdom Accountants and Advisors is right there in the chat room. We'll share it as well with everybody who registered for this program. Make sure you reach out. Sometimes we apply medicine after death when it's already too late. You don't want that to be your case. So reach out for help, reach out for counsel. Counseling is free, but consultancy attracts a fee. Remember that, right? So this is the business they do, and they will be saving you money, but it will also help you to make a lot of profit. So let's reach out. To be honest, this has been exceptional for me. I knew this was coming. I knew I'll be getting some big dance moves, in my head, and then to straighten my head. And thank you so much, Pastor Sam, for this impactful session. We are truly, truly, truly blessed to have you. And thank you so much, sir. Thank you so much for taking time out. I know how crazy your schedule is. I know how crazy your schedule can be. Thank you so much for honoring this invitation. We are deeply, deeply grateful. I certainly will be reaching out again and again. I'm sure that this is not the end of the sessions. We're still going to have multiple sessions in the near future. Thank you so much. And thank you so much, everyone, for making time out to be here. I'm sure this has added value to you all. So winners never quit and quitters never win. So stay inspired till you succeed. So we'll see you again next week, Tuesday. And don't forget Saturday. Bye for now, everyone.
All right. Thank you.
Thank you, sir. Yes, sir.
Thank you. Bye, everyone. See you next week. See you on Saturday as well. I look forward to seeing you on Saturday.